that I think Bitcoin likely is, directly going to go towards. I've always said 150,000. And a lot of people are like, that's so bearish. That's so bearish. I see 200, 300, 500, like all these crazy numbers. I would love for it to go there. I'm in the boat. Let's go. Let's go as far as you guys want. But in the last cycle, Bitcoin bottomed about 3,200 and it went to 69,000. And so if you just kind of cut that in half, I don't know, it's like 10, 12%, X from there. So I've just always thought like 10X off the bottom's about 150,000. Maybe it's a little bit higher, whatever. But like that is the dampening of volatility to the upside. And then you're not seeing the 30% drawdowns. You're kind of seeing these 15% drawdowns. And so you're getting the squeeze where it's trading more in kind of a band.
Pompliano begins by emphasizing that Bitcoin trades like a macro asset. Right now, there is growing bearishness in the stock market, with nearly 47% of investors in a recent survey believing that stocks will be lower 6 months from now. This bearish sentiment extends to Bitcoin and other cryptocurrencies. Historically, when investor sentiment becomes overwhelmingly negative, it often presents opportunities for those who are willing to take a contrarian approach. He warns that Bitcoin has a tendency to lull investors to sleep before making a significant move in either direction. Whether Bitcoin moves up or down in the short term, he stresses that now is the time to pay attention, as market complacency often precedes explosive price action.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Listen, Bitcoin trades like a macro asset. Right now, there is increasing bearishness on stocks. 47% of investors, based on the survey from last week, now think that stocks will be lower 6 months from now. So naturally, if people are bearish on stocks, they're getting bearish on cryptocurrency, etc. This is the exact moment where you got to not only refuse to get lulled to sleep. Do not get lulled to sleep, because when Bitcoin gets you lulled to sleep, it then usually explodes in either direction. And so it's kind of like, now's the time to pay attention. It could go down, it could go up. But the second thing also is when everyone else is bearish, that's the time to actually be bullish, right? Everyone else is scared. Well, there's probably opportunity out there. And you see this in the stock market. You also see this, I think, in Bitcoin, et cetera. You used to have to buy Bitcoin for $106,000, $107,000. Now you can buy it for $95,000. That's called discount, right? My buddy Mark Yusko always says that investing is the only place where when there's a discount, people run out of the store. Usually people run in the store, they're excited. So I think that's a big part of this. The second thing is, yes, Trump on the campaign trail talked about how he's going to protect Bitcoin, do all this stuff. Bitcoin is up. I think it was like $70,000, $69,000 on November 1st. It's up to almost 100K. It is appreciated significantly, almost 50% since the election. So when you look at that, you're like, it's not that people are disappointed. It's actually that it ran up in anticipation and it's a natural cooling off period. And the last thing I would say is in prior bull markets, we saw multiple 30% drawdowns. So what you would see is 2017, Bitcoin went from 1,000 to 20,000, ran all the way up. It would cool off 30% drawdowns. We're not seeing that. We're seeing like 15% drawdowns, maybe max 20%. And so what that tells me is that there's a lot of buying demand. Every time Bitcoin gets to 90K, all of a sudden it's back to 95K. There's a ton of buying demand. And so what you're seeing, in my opinion, is you're seeing a compression of the volatility. And if you think about, where did Bitcoin bottom in the last bear market? It bottomed around $16,000, $16,500, whatever. It's now at, 100.
That's a far cry from 95,000.
When people have asked me about price, future performance. Look, I'm not predicting anything, but if you said to me I had to pick a price that I think Bitcoin likely is, directly going to go towards, I've always said 150,000. And a lot of people are like, that's so bearish. That's so bearish. I see 200, 300, 500, like all these crazy numbers. I would love for it to go there. I'm in the boat. Let's go. Let's go as far as you guys want. But in the last cycle, Bitcoin bottomed about 3,200 and it went to 69,000. And so if you just kind of cut that in half, I don't know, it's like 10, 12%, X from there. So I've just always thought like 10X off the bottom's about 150,000. Maybe it's a little bit higher, whatever. But like that is the dampening of volatility to the upside. And then you're not seeing the 30% drawdowns. You're kind of seeing these 15% drawdowns. And so you're getting the squeeze where it's trading more in kind of a band. Now, on one hand, there's a lot of Bitcoiners that be like, I really want Bitcoin to go up. I want Bitcoin to go up. Like, I let it go higher. On the other hand, there's a lot of people coming into Bitcoin pushing the price higher because now they're like, oh, it's unlikely that Bitcoin is going to have 50% drawdowns in a day. There is, again, that dampening of volatility. So as you get mass adoption, you're going to get less and less asymmetry to the asset. But that's how it should work. You get paid the reward for the risk you take. It was way riskier to buy Bitcoin in 2016 than it is to buy it today in 2025. And so I just think that people always want to kind of get into this game of, I wanted to go up as much as it went up in the past, but you're not taking the same risk you took in the past. So you should expect it to go up less. Now, all that said, I think Bitcoin is very well positioned. We just saw Mubadala, Abu Dhabi's sovereign wealth fund, and one of their funds come out and say that they now own about $500 million worth of the Bitcoin ETF. Huge deal. I think it's the Wisconsin Investment Board. They just like tripled their position in the ETFs. You have Russia that's now come out and said that they're mining it. They're using it for transactions. You have El Salvador still buying Bitcoin. You have many other countries around the world that are all kind of playing and dabbling in different ways. I think the UAE's got a partnership with publicly traded miner where they're mining Bitcoin, etc. So like this is happening. The number one question in the world is the United States going to buy? And I think if they do not buy, if they do not establish the strategic reserve, that's where you'll get that kind of letdown. People will be upset. They'll be like, hey, I was promised something, I didn't get it. If it happens, even though it doesn't happen in the first 30 days, it happens in the first 100 days or whatever, then I think people will be euphoric and excited, and this will all be kind of a nothing burger.
Pompliano also discusses the relationship between Bitcoin and global liquidity cycles. He references a chart that tracks global liquidity over time, showing how financial conditions impact market behavior. Historically, Bitcoin has performed well when liquidity is expanding and has struggled when liquidity contracts. Looking at past cycles, liquidity contractions in 2000, 2008, and 2019 all coincided with major economic downturns. The recent bottoming out of liquidity in October 2022 and subsequent expansion suggests that financial conditions are once again turning favorable for Bitcoin.
This is the black line is that's the global liquidity measure according to Michael, and that 65-month wave is just that. It's that wave line that that is it's a derivative of that time period, and it goes in that, it's like a sine wave. Mm-hmm. And you can see that the global liquidity cycle just follows it, not to a T, but you can see that close. The peaks and valleys kind of hit in those same periods.
Yeah.
Right. So when you go back to like 2000, you can see that global liquidity was coming out in 2000, 2001. There was a rising after that. Uh-huh. And go to 2008, you can see how global liquidity, it peaked right at that global financial, the great financial crisis. And then, it just collapsed. But you see how it stops there in 2010, 2011, 2012, that black line kind of stops. Well, that's central bank manipulation. Right. So they kept it from contracting too much, too rapidly. And then the upside, they, in 2014 to 2018, they were keeping it from expanding too much. But then you get back into 2019, you see how all the capital's coming out. Well, that's where we had, right in 2019, we had a crisis here in the United States. I've talked about this a few times before, but there was a repo spike. What is that? Well, this is a great chart to see what happened here. You can see right there, 2019, you've got the liquidity kind of bottoms out. Well, what happened was the Treasury in September to October of 2019, the Treasury was, they issued their QRA, their quarterly funding announcement, talking about how many bonds they're going to issue, how much money they're going to borrow. And it surprised people. But at the same time that you had companies making their tax payments for the fall. At the same time, the dollar was strong, and it was difficult for foreign corporations to buy treasuries and foreign entities to buy treasuries. This all came to a head in the fall. And what does that mean? Well, there weren't enough dollars, basically, for people to take their treasuries and put in the repo market. There's a private repo market back then that you could put your treasuries to another company. Like hedge funds do this all the time. They've got $100 million of T-bills or actually treasuries that they want to borrow against. They'll lend them overnight to another institution, to a JP Morgan or something. JP Morgan will give them dollars for that, and they'll pay an annualized rate on that overnight for that repo, repossession.
So they swap treasuries for cash when they need some liquidity.
Exactly. Mm-hmm. And so there's an interest rate for that. Well, during this crisis, the interest rate went through the roof overnight. It was like, something is wrong. Something's broken. Somebody's blowing up. They need cash. This is really bad. And the Treasury and the Fed panicked, basically, for good reason, and said, oh, we've got to, stop QT and turn around and put more liquidity in the market. And so back in 2019, you can pull up a chart on Fred and see the Fed balance sheet. And you can see that the money supply started expanding. The central bank, the Fed's balance sheet started expanding back in the fall of 2019 before we ever even had COVID. So, and people forget this because COVID was so jarring that they forget that this happened all the way back then. And so, but that's what that's showing. And then the money supply just expanded straight through 2021 into 2022. And then the Fed turned off the spigot and it came back in. And it bottomed out in October or so of 2022. And we're back rising again.
And I remember doing a show on the previous What Bitcoin Did with Caitlin Long and Travis Kling back in 2019 when that repo market was blowing out. And they, at the time, they were saying that this signifies something is really, really wrong. And then 2 or 3 months later, COVID happened and we know what happened then. Is that kind of the efficient market hypothesis playing out?
Kind of, there's only, the problem though, Danny, is
He also revisits the 2019 repo market crisis, which signaled stress in the financial system before the COVID-19 pandemic. During this time, overnight lending rates spiked and the Federal Reserve was forced to intervene by injecting liquidity. This event serves as a reminder that financial markets can experience sudden disruptions, and Bitcoin's role as a hedge against systemic risk continues to grow. Please like and subscribe.